Welcome, everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back, everyone. So, Uncle Frank, what are you watching right now? Let's start with this headline from Fortune. Billionaire Mark Cuban says we're not in a tech bubble and there are no real comparisons to the dot-com era. But then in contrast, here's a headline from Markets Insider. The epic stock rally will end badly. The AI bubble will burst and the economy will sink, warns elite investor Jeremy Grantham. But then my favorite, NVIDIA becomes a short seller nightmare from Bloomberg. The surge in NVIDIA shares on Thursday has left short sellers with about $3 billion in paper losses, according to an analysis by S3 Partners, which called it an AI-generated nightmare for bearish traders. The mark-to-market losses are another blow for contrarians who argued that NVIDIA's sky-high valuations and speculative fever had all the markings of a market bubble. The chip maker is the third largest U.S. short, with 18.3 billion of shares that have been borrowed and sold. Now, the truth is, guys, none of us really know if tech, and especially NVIDIA, is a bubble that will go down and take the market with it. But what we do know is what I'm rooting for: a continuation of the tech and AI rally that will grind the short sellers, our natural enemies, deeper into insolvency. Now you know what to root for. As you know, this is not financial advice. I am not a financial advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. Now, let's review the calendar to see if we can pinpoint which events have the potential to kick a hedge fund's ass into the food processor and produce the margin calls they are long overdue for, in my opinion. Monday, February 26th, new home sales. Tuesday, February 27th, consumer confidence. Wednesday, February 28th, the AMC earnings call. Now, ideally, we have a great call, right? We beat quarter over quarter, year over year. Adam doesn't kill any subsequent rallies. That would be the best possible outcome. Then, Thursday, February 29th, initial jobless claims, personal income and spending, and now the Godzilla of all economic releases, the entire PCE index data group, and no less than 4 Fed presidents will be speaking. Thursday will be a big day. Now, Friday, 2 days after our earnings call, Dune Part 2 drops. Already getting great reviews. This is going to be our first big blockbuster weekend of the year. So if we have a great earnings call, Adam doesn't spoil it with any dilution or bankruptcy talk, or, lets the stock rally if we get one, this would be great momentum for us, right? Now, on March 6th and 7th, Jay Powell has to testify before Congress. On March 11th, the FRB ends the bank term funding program. On March 12th, we've got CPI. On March 14th, PPI. March 15th is our first triple witching expiration day. That's also the expiration day where we've seen this huge swell of AMC calls, right? So we're going to be keeping an eye on that. And then, if all that wasn't enough, we close out this time window, March 19th and 20th, with the FOMC meeting and a possible rate decision, right? The focus will be shifting to balance sheet runoff. Now, subscribers to this channel know I believe it's impossible to beat Wall Street on the AMC trade if predatory short hedge funds, prime brokers, the regulators, the financial media, the limit up, limit down committee, and even elements of AMC management are all working together against us. I mean, just look at the stock price, guys. Look at the market cap. What, are we actually trading below our quarterly revenue? below our actual cash and liquidity on hand, it's obvious they could do whatever they want to us under these conditions. But, if there's a white or black swan event that causes a crisis within the leverage chains of the hedgies, turning their prime brokers against them, then we may see some forced portfolio rebalancing demanded by the primes, a fancy way of saying margin calls. Then we might see some covering in the heavily shorted issues like AMC. So when you look at how treacherous this month could be for the market and for the hedgies, if we were to get a black or white swan to fly right in the middle of all these events as they unfold, that could produce the conditions that we've all been looking for. Now let's cover AMC's earnings call. Now, obviously, we expect Q4 of 2023 will beat Q4 of 2022, and we should do well in the year-over-year comparison. But most analysts expect us to lose money for the quarter. Now, Cinemark just reported, and maybe we could get some hints into our upcoming report by reviewing theirs. From The Hollywood Reporter, Cinemark CEO, 95 wide-release movies to hit theaters in 2024. That's only 75% of pre-pandemic level. So they're already letting us know we're going to have a tougher year this year, right? From the article, Cinemark reported a narrowed fourth quarter loss of $18 million compared to a year earlier loss of $99.3 million as revenue rose 6.5% to $638.9 million, the exhibition giant reported. Quarterly adjusted EBITDA grew to $79.6 million from $73.5 million a year ago. On the earnings call, CEO Sean Gamble noted that the total 2023 adjusted EBITDA recovered to within 20% of 2019 levels, and that's with 25% less attendance. That's an interesting development. For the 3 months to December 31st, admissions revenue increased 5.8% to $322.4 million, while concession revenue jumped 7.7% to $243 million, driven by a 3.6% increase in attendance to 40.6 million patrons, Cinemark said. Its worldwide average ticket price was $7.94, with concession revenue per patron coming in at $5.99. Domestically, the average ticket price was up 2% year over year, reaching an all-time high of $10.21 in the quarter, which management said was driven primarily by the elevated ticket pricing and box office success of Taylor Swift, the Eras Tour concert film, as well as strategic pricing initiatives. In the U.S., Cinemark hosted 40.6 million patrons in the fourth quarter compared to a year ago figure of 39.2 million. In 2023, film volume grew to 110 wide releases, reaching 85% of pre-pandemic levels, up from 65% in 2020, the company said. Film volume in 2024 is expected to be about 95 titles. Now, since we're a distributor as well as an exhibitor of both Beyonce and Taylor Swift, I'm hoping our numbers are about the same, only a little better in each metric. The Cinemark CEO would continue. While 6 months of work stoppage associated with the Hollywood strikes will likely cause a dip in wide releases to approximately 95 titles into 2024 for an estimated 75% of pre-pandemic levels, we expect film volume in 2025 will quickly spring back to the recovery glide path it's been on over the past 2 years, notching another step closer to pre-pandemic levels based on current production activity and express plans at the major studios, Gamble said on the earnings call. He noted that premise is also supported by Amazon's and Apple's plans to continue growing their theatrical film slates, as well as the trends in non-traditional content growth such as faith-based content and concert films. Now, I am concerned that Amazon refuses to put Roadhouse in theaters and Netflix refuses to put Beverly Hills Cop 4 in theaters. The director of Roadhouse is boycotting his own film's premiere because it's not going to have a theatrical run. Anyway, Mr. Gamble would continue. 2023 represented another year of meaningful progress for our industry and our company. Key indicators pertaining to the fundamental drivers of our industry, specifically consumer behavior and product flow, were further reinforced, and our team's outstanding operational execution and financial discipline delivered outsized results. He added, "We believe our strong 2023 results provide a clear sign that our many ongoing strategic growth and productivity initiatives are driving significant impact. As we look ahead, we remain highly optimistic about the future and our company and our ability to fully capitalize on our industry's continued recovery." Now, Cinemark stock is up 33.93% year over year, but AMC stock price is down 89.41% year over year. That was as of February 16th. Is it possible that Cinemark is performing better than AMC because they have a better management team? Maybe Sean Gamble runs a tighter ship than Adam Aron. Let's start by comparing their comp plans. Sean Gamble receives a base pay of $825,000 and a non-stock cash bonus of $1.4 million, and then a stock award of $3.6 million, bringing his total compensation for 2022 to $5,954,000. Over at AMC, Adam Aron is paid a base pay of $1.5 million. He gets a $6 million non-stock cash bonus, and then $16.1 million in AMC stock. His total comp plan ends at $23,716,000, nearly 4 times more than the CEO of Cinemark. Why don't we also compare the CFOs as well? Cinemark's Chief Financial Officer, Melissa Thomas, is paid $2,397,000, while AMC CFO Sean Goodman is paid $6,274,000. That's 2.6 times more than Ms. Thomas is paid. I also noticed Sean sold over $17.4 million worth of AMC stock over the past 3 years. Melissa Thomas didn't sell any of her shares. I wonder which executive is a true believer in their company. You know, it occurred to me, maybe it's the things Sean Gamble doesn't do that makes the difference in the stock performance of our two companies. During our last earnings call, which was the best third quarter in our company's history, Adam never mentioned any dilution plans during the call. Then that very evening, the writer's strike had finally ended. That was about the best trade setup you could ever hope for. Then the next morning, pre-market, Adam announced a massive dilution event. And you know what happened next. Even though Adam had over $700 million in liquidity at the time, he began a campaign of swapping stock for debt at near record low prices. Sean Gamble didn't do anything like that after his earnings call. I don't believe Sean ever invested his stockholders' money in a bankrupt gold mine to bail out investors that were short or put holders against his company. I don't remember reading Mr. Gamble has a habit of texting nude images of himself engaged in a sex act with a teenager to complete strangers, getting himself embroiled in a blackmail scheme. I never saw Cinemark spend $25 million on a short commercial with a Hollywood actress instead of promoting the AMC A-List program. When it comes to earnings, AMC has surprised to the upside 9 out of the last 10 quarters, 5 of them consecutively. And that's mainly because we have a bunch of jerk-off analysts covering the stock, in my opinion. I am pleased to report there's finally been an uptick in institutional ownership, according to Fintel.io. I want to use this last slide to warn my subscribers about a couple of things. Number one, Fitch and S&P have already slashed their U.S. credit ratings. Moody's lowered their outlook from stable to negative, but they let the U.S. keep its AAA rating. If they change that or cut that, that will be big trouble. Also, if you start to hear calls in the financial media to ban the short selling of banks and financials in the coming weeks or months, brace yourself for a serious correction. Finally, when it comes to AMC, if the stock is being artificially suppressed, I think it can spike and very suddenly. So whatever the outcome of the earnings call, I believe we could get a rally from these ridiculously low prices. What we don't know is, will Adam kill the rally? And if he does, will it be before, during, or after the call? This is not investment advice, and I am not an investment advisor. Now, when it comes to our enemies, I expect them to cheat like they always do. Do you really think they'll stop shorting and spoofing, stop misusing the dark pools or the limit up, limit down halt system? Of course they won't. That's why I root for black and white swan events. Because if the right one comes along at the right time, all those illegal tactics won't work. The prime brokers are going to want their money, just like Archegos and Credit Suisse. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.